Good morning and welcome to Advent Risk Management's webinar, Credit Insurance, Helping Your Business to Navigate the Risk Environment in 2022. My name is Arthur Williams and I'm the Credit Manager here at Advent Risk Management. For your information, Advent Risk is one of Ireland's leading suppliers of surety bonds, but also acts as an intermediary for credit insurance policies, improving companies' credit ratings and legal indemnities. For more information, you can visit us at www.adventrisk.ie. The agenda for the webinar today, I'm going to have a quick run through as to what credit insurance is, its key benefits and what we're seeing in the market right now. And then I'm delighted to be joined for a discussion with Tony Gordon, who's the Senior Risk Underwriting Manager at Atradius Ireland, as he gives us his view on the economic outlook for 22 and into 23. At the end of the discussion, we're taking some questions from the audience, so please use the chat function for questions. The webinar will be recorded and shared on our social media channels for your information. So let's jump straight into it. What is credit insurance? Well, simply put, credit insurance provides vital protection to businesses against the impact caused by a bad debt, either from insolvency or non-payment by a customer for goods or services sold on credit. A company can decide to include either its domestic sales or its export sales. And there's different policy structures available, such as whole turnover, top 20 customers, or maybe you just want to insure one single risk. At the onset of a credit insurance policy, the credit insurer's risk underwriters will analyse the creditworthiness and financial stability of the insured's customers. Each customer will be assigned a credit limit, and this will be the most the insurer will be liable for in the event of a bad debt. However, unlike other types of business insurance, a credit insurance policy doesn't get filed away for 12 months to gather dust on the shelf. The relationship between the insurer and the insured becomes dynamic. The credit insurers are constantly monitoring the insured's customer in case that risk has either improved or deteriorated. So why is it important? If you look at the image on screen, you'll see on the left-hand side typical bad debts that a company might incur over the course of a financial year. On the right-hand side, you'll see the new turnover, depending on your margin, needed to offset losses from bad debts. If we take an example of a bad debt of €25,000 and a company may be working on a profit margin of 5%, that would mean that that business has to generate sales or additional sales of €500,000 just to cover that one €25,000 loss. However, with a credit insurance policy, that €25,000 loss is indemnified to the insured at 90%, giving a payout upwards of €22,500. Obviously, the lower the margin, the more sales that business has to take. And obviously, things are challenging pre-COVID, but obviously post-COVID, that makes it even more challenging. On top of that, credit insurance policy also provides third-party credit assessment. Yes, companies are doing their own credit assessment, either based on trade references or pulling credit reference agency reports, but having a third party to throw another set of eyes over it as to who you should trade with or who you should not trade with gives added confidence to you, the insured. Credit insurance also improves a business's credit rating. Not only is it protecting against a bad debt, but it's giving confidence to the bank, perhaps for invoice discounting, or equally to credit insurers who be insuring suppliers into your business. So what is covered? First and foremost, it protects one of the most important assets on any balance sheet, the debtors. It insures against insolvency, so any form of insolvency, examinership, receivership, administration, creditors' voluntary arrangement, the ones we hear in the news all the time. Or equally, it just protects against non-payment by the insured's customer, i.e. a bad debt. It relates only to business-to-business transactions, so sales to limited entities, unlimited entities, PLCs, cooperatives, sole traders or partnerships. It doesn't relate to sales to private individuals. Yes, it covers Irish sales and your export sales, and is a great tool for growing your business abroad. As many businesses turn away from the UK due to Brexit and are looking to grow their business on the continent, perhaps your company could meet somebody at a trade fair. Maybe that company places an order of €50,000 with you. How do you know that that business is going to pay you back should you ship those goods? With credit insurers have offices globally. So they can check out that buyer for you and tell you yes or no, are they good to receive those goods on credit. Predominantly, it's purchased by SMEs, corporates, multinationals, but in recent years, startups or micro SMEs are purchasing the product too. Purchasing drivers vary for each business. Perhaps, again, you've had a bad debt. Perhaps it's required by a bank for invoice discounting. Or perhaps your business is more interested in the most up-to-date financial information on your customers. Credit insurers are more privy to more up-to-date information than your typical credit reference agency. And one of the most undersold elements of a credit insurance policy is debt collection. If you're uninsured and perhaps you have to send out legal letters to a company who owes you money, that's going to cost your business money. Equally, you might have to go to court to get a judgment against that particular entity. Again, legal costs in the Irish system, as we know, can rack up. If you have an insured customer under your credit insurance policy, they are going to cover your costs both for collection and your legal costs. So an extra benefit in having credit insurance. So who are the key insurers in the Irish market? Well, the big three as they're known are Atradius, Allianz Trade, former Euler Hermes, and Coface. But nipping at their heels are Nexus, Tokyo Marine, and Credendo. Three operators from the London markets include Markel, Chubb, and AIG. So what are the key issues for Irish companies right now? What are we hearing from our customers? Well, first and foremost, the requirement for more up-to-date financials on their customers, because companies can't be relying on accounts filed at the CRO. You want to know where they stand right now. This is becoming more and more important post-pandemic and with everything that's happening in the economy. Ensuring their customers have a positive credit rating. You're not going to ship out goods to a company who you don't think is not going to pay you back, but also ensuring that you, as a risk, have a good credit rating for your suppliers, or perhaps you're going in for a tender. We've assisted numerous companies in the last 12 months with their own credit rating. COVID-19 government supports are coming to an end in June, and at this time, it's approximately estimated that there's over 20,000 companies availing of government supports. It'll be challenging for those businesses to continue to trade once they come to an end. Supply chain issues still continue to be there, obviously post-Brexit, and also then add into the mix raw material prices increasing and labour shortages. This is across every sector in society. And the big buzzword is inflation. We hear about it every day in the news. We can't escape it, and the impact of rising fuel costs, rising gas, electricity, and food. How are businesses going to pass these costs down to their customers? And obviously then the tragic situation that's happening in Ukraine right now with the Russian invasion and the uncertainty that's causing on the world markets, the price of fuel, the price of gas. Ukraine is a huge supplier of wheat, grain, sunflower oil. All of this is going to filter down into the economy. So how does Advent Risk, or how can we assist your company? We review the client's needs to ensure they're getting the best spend for the premium when it comes to structure, terms and conditions, and risk appetite. We remarket the policy to see how the insurance market's appetite is for their business and to see how other insurers view their clients' key customers. We manage the policy day to day with the client in conjunction with the underwriters over the course of the insurance policy. And one of our USPs is we're one of the only intermediaries in the Irish market with risk underwriters on our team. So we can qualify decisions that the client might believe to be incorrect or disagree with. Now, I'm delighted this morning to be joined by Tony Gordon, who is the Senior Underwriting Risk Manager at Atradius Ireland. Tony has worked in the credit insurance industry for more than 30 years and would be familiar in many's the boardroom throughout the land. Atradius is one of the world's leading credit insurers operating in 50 countries worldwide and writes 7 billion euros of credit lines for its customers in the Republic of Ireland and 3 billion euros in Northern Ireland. Tony, you're most welcome, and thank you for taking the time out of your busy day to have a quick chat with us.
Good morning, Arthur. Pleasure to be here.
Tony, in the last couple of weeks, I've been thinking about our discussion, and obviously the last 2 years have been very challenging for us all personally and from a business perspective too. So I thought it'd be a good idea to take you back to March 20, when the pandemic hit these shores and we went into a national lockdown. Can you give us a feel for how the last 2 years have been for you and the management team there at Atradius, not only in managing your own staff, underwriters, commercial staff, etc., but also more importantly, monitoring risks for your customers under, I suppose, such unforeseen circumstances? Perhaps you can give us a feel for those first couple of months and where you see things in the last 2 years.
It feels like a long time ago now, Arthur. I have to be honest, March 2020, and very unusual times they were. As a employer, you have to be very cognizant of the safety of your staff, and in that regard, sending everybody home, trying to make sure they all had the technology to do the job from remote working was a learning curve, not only for Atradius, but I think everybody in Ireland.
Yeah,
But something that we came through relatively quickly. A lot of upscaling and a lot of investment in a very short period of time. Then from the actual day-to-day job point of view, obviously very stressful time because nobody knew what was going to happen. The government supports had not yet been announced, and the Irish economy had effectively closed. And we
correct.
immediately saw a massive spike in notification of late payments. So companies very wisely holding on to their cash until they could see what was happening, and because they weren't ordering, they weren't paying for suppliers, and therefore we started to see a wave of late payments coming through the system very quickly. So the first couple of months we spent talking to companies who had been notified as late payers, either putting in place repayment plans, or rescheduling of debt, or simply freezing the debt
Yeah,
until we could see what was happening. So the first couple of months were very much firefighting, trying to manage our policyholders' exposure and risk in that regard. And then the second couple of months were spent gathering information. So as the government supports kicked in, as businesses didn't fail in the way they could have, and we have to acknowledge those massive government supports that kept the Irish economy afloat through the last 20 months.
yeah,
So we then started to gather information on businesses and how they were coping with the lockdowns, etc. Because what we didn't want to do was exacerbate people's problems
yeah.
by pulling cover. So we worked very hard at first ascertaining what our policyholders' needs were. So we operated on a needs basis for underwriting, removing or reducing cover that wasn't being used to allow us to focus on where cover was needed. And then as a team of underwriters, we spent a long time talking to those companies, getting up-to-date management information, getting business plans, and getting details on their liquidity, because obviously at times of downturn, liquidity is the number one factor. And in that regard, the banks held their nerve as well, as did most credit underwriters, to allow us to see through that first 12 months of the lockdowns to see where the economy was going to go through the second 12 months. So it was certainly a challenging time, one that I think everybody in business, not just credit insurance business, has learned an awful lot from in a very short period of time.
Absolutely, absolutely. And I suppose then, Tony, as we come on 2 years, we come to the start of, I suppose, 2022. The government rolls back pretty much all restrictions, and there's a sense of positivity in the air. I think for everybody individually and from a business perspective. Um, but the outlook is positive for the year ahead as well. But we start to hear more and more about inflation, and maybe I suppose whilst we think it's here in the short term, as the economy is reopening, we start to realize very quickly that it's going to be here in the medium to long term. And then obviously, we add in the Russian situation and material shortages, like so much negativity and so much to stay on top of. I mean, how do you see that filtering down into the Irish economy and ultimately to your clients, customers? Are the challenges as we expect going to be as strong as we anticipate for 2022 and into 2023?
I think, Arthur, businesses can and consumers and economies can feel themselves unlucky if they have one major shock in a 6 to 10 year period. And we saw that, particularly, say 2008 was a particularly large shock to the Irish economy. But in reality, the Irish economy has, over the last 3 years, taken a number of really large shocks. The first one, obviously, being Brexit. And I think the impact of that hasn't been truly felt because the government supports that came through from the second one being COVID. And as we come out of COVID and as we come out of those lockdowns, the Irish economy is getting hit with two more large shocks in reality. And the first one, and even more detrimental, I think, is the increase in the energy costs.
Yeah.
And what we're seeing there is just astronomical increases that are really causing significant impact for Irish businesses. And those started late last year. We saw Premier Periglaze, for example, go into examinership in December 2021, and specifically naming the increased energy costs as the reason for that.
Okay.
And then that leads into 2022, where those shocks, that the increases haven't slipped away, but actually they increased further, and they've added then onto ongoing inflation in the Irish market across all trade sectors. When we were looking at and putting together our business plans for 2022, we were looking at inflation of 3 to 5%. And now we're looking at inflation of between 8 to 10%. That cannot be good for the Irish market. And when we're looking at risk, you've got to wonder how businesses can pass on their increased input costs into the market. It's a real challenge.
Absolutely. And I suppose then, Tony, with that in mind, with inflation, like, what are the top three sectors that keep you up at night? What would they be and why? For what's your key focus there?
I think number one is the construction trade. And I think in that regard, while we've seen record units of housing being built and started in 2021 and into 2022, as high as they have been since the Celtic Tiger days, I think we've got to look at the significant input costs there. And in those sectors, we're seeing inflation of between 30 and 40%. And what happens there is, if you have fixed price contracts, you can't pass on those costs, and businesses are going to struggle because of that. And what we've seen then are some very large infrastructure projects which are not going to be started now because they don't make economic sense. There is no return on capital at the current cost. I think the challenge will be for those type of investments. Do people expect that the input costs are going to fall back over the longer period, or is this a new normal whereby these are going to be the costs going forward? And that's a significant decision for people making very large investments to make.
Absolutely.
Yeah. So construction has to be number one for me.
Okay.
Food processing, I think, is number two, particularly where those businesses again are selling into the multiples. So what has always been a very big advantage for some of these businesses to ramp up, to get scale in their operations. And now you will find, because they're on fixed price contract with the multiples, they may be manufacturing at a loss, and it may be some time before they can renegotiate their particular contracts, particularly with the major supermarkets. We've seen some of those supermarkets will only negotiate on an annual basis. Although Tesco recently came out and did forewarn consumers that prices have to increase.
Yeah.
But you were going to find there's always a time lag to getting those increases. So food processing is number two. There's no doubt about it.
Okay.
And then three, I think, is still hospitality and retail. Hospitality and retail have quite a large proportion of what we would call zombie companies. So companies that would have failed over the last 2 years, other than for government supports, and are still there. But as government supports wind down between now and June, those businesses, I'm sure, will try and do everything they can to survive, but it's unlikely they will do so given the fundamental issues that they faced over the last 2 years. So you have got zombie companies there, which is going to struggle, and then because of the knock-on effect of inflation on the general consumer, you've got to expect that consumers will be focusing more on their energy bills, on their own household bills, rather than necessarily though spending money into the hospitality sector.
Yeah.
So there's going to be an issue there. There's no doubt about it. People will go out a little less. They'll spend a little less, and there'll be problems there. And that again is exacerbated by labour shortages across all those sectors. But again, hospitality in particular, and that leads to wage inflation, leading on to increased prices, leading to the pressures that people won't spend that money.
Yeah. We'll be all tightening our belts, Tony, but it's things.
There's no doubt about it. Yeah,
Yeah.
I think that's the wave of it for 2022.
Absolutely. I suppose, Tony, we talk to a lot of companies regards taking out credit insurance. And some of the things that always come back are, I'm contemplating it, but I'm skeptical about handing over, premium to an insurer when I haven't had a bad debt in 5 years. I know all my customers, and most of them all pay me on time. How should I, why would I purchase this product? And it's a discretionary spend, let's be honest. In your opinion, what would give you that confidence?
For me, it comes down to peace of mind.
Yeah.
To have the insurance in place, because there are these unforeseen circumstances, there are these shocks that arise that people just will not see.
Mm.
And if you take that, your customer, but there's always the issue: do you know your customer's customer? Because if you take somebody like Roadbridge, which will have a significant shock to the Irish construction sector, the level of unsecured creditors in that one company alone is in the region of 25 million euros just for their Irish suppliers. That leads to a lot of businesses that either were geared to supplying Roadbridge as a customer, which have lost their major customer, but also they will have suffered a bad debt in that regard. And the likelihood is there'll be a domino effect across the construction sector in a very short period of time. So certainly you've got to realize that supplying companies, you don't always know what's going on in the background. So peace of mind is certainly the number one for me.
Absolutely.
And then it's to access to information, access to knowledge. And if you take Atradius, and you very kindly mentioned some of the stats that we have on the island of Ireland, so we have credit limits and information on over 13,000 Irish businesses north and south of the border, totaling a 7 or 8 billion euro worth of exposure. But if you broaden that out across the board to Atradius's worldwide network, we have offices in 55 countries, 160 offices, 3,500 credit underwriters, ensuring over 110 billion of cover, on an annualized basis. So even if you want to look to expand your markets, if Ireland, for example, doesn't grow this year and you want to expand into other markets, you don't know those markets as well as you do your own. You don't know the companies you may be dealing with. You may be getting orders via the internet as opposed to face-to-face meetings. And therefore, you need a third party with a wide reach, who will have information on those companies, who will be able to credit assess them and give you a positive or negative steer on whether you should do business with them. And then, of course, if something goes wrong, companies like Atradius will step in with a debt collection process. Atradius were recently voted Debt Collector of the Year in the UK and Irish markets, for which we were very grateful. And what we have is a team of dedicated professionals who will collect the debt of our policyholders in the event that things go wrong.
That's very positive, Tony.
No problem. I'm sort of practiced at this point in time.
Just one of my final questions, Tony, for you today. A number of our customers, both on the surety side and credit side, they're very conscious of maintaining a positive credit rating for their suppliers. Probably you, the credit insurers, but also like if they're going in for a tender, it's very important, you know, that they have a good rating with credit reference agencies. I think it's fair to say over the years, Irish companies have not been very proactive, as maybe our European friends have, with sharing information with credit insurers. Has that stance changed since the pandemic? Are you seeing more companies providing you with information? And how important, you know, considering the negativity that's there, will it be for companies to continue to do that going forward over the next 12 to 24 months?
So Irish companies do provide us with information, but it is not on a proactive basis, if that makes sense.
Yeah.
It's where companies like Atradius will ring them up looking for information, which means we explain who we are. We may be able to give our policyholders name as to why we want the information, but that's very much a reactive position from Irish companies. It really is a bugbear of mine over the years that Irish businesses aren't proactive the way they are on the continent in providing the information on an ongoing basis. Because what will happen if the information isn't publicly available, you know, the first decision of a credit underwriter may be to refuse the credit, which causes Irish businesses problems. They either can't get the credit, or they then have to try and very quickly, in order to secure the order, they have to then go, who is your credit underwriter? Who can we contact, etc. That this slows the whole process down. And at a time when there are specific shortages on a global basis, you know, continental suppliers will simply move to another customer. So Irish companies are not proactive in providing that information, and they need to do so. They need to be smarter in this regard, and they can do that in a number of ways. They can either file accounts at CRO before they're due, or at least when they're due, because the number of companies that file late is still too high. Or they can contact businesses like yourself, for example, who will be able to spread that information among a number of underwriters, or they can talk directly to the credit underwriters themselves. And that's whether they've good information or bad information, because what the companies don't want is to have poor information simply filed at CRO, where people like myself will pick it up and make decisions without knowing the circumstances or without knowing what has been done since, because information filed at CRO is always historic.
Yeah.
So it is always important for companies with either positive or negative information to build those relationships with credit underwriters in the way that they do with the banks.
Correct.
Because in effect, we are supporting unsecured credit. You know, companies don't have to provide guarantees for a credit limit from credit underwriters. They don't have to, you know, they don't have to provide any sort of security. But what they do need to provide is information, because that is the way they can maximize their their credit lines.
Yes.
And it might reduce their dependence on bank overdrafts, ID facilities, etc., which can be quite expensive.
Yeah, there's always a story to be told, Tony, as you say. I suppose, I can't let you go, Tony. I know you're a big Leinster and Ireland fan, and you're heavily involved with Arklow rugby. How do you think Leinster are going to fare this weekend? Do you see them in Marseille come May?
Yeah, I must admit, very optimistic. I'm afraid for the couple of weeks ahead against Connacht. Which is disappointing, as I you know, originally a Sligo man, but having lived on the East Coast for many years now, I do feel for Connacht, but I think there's no doubt Leinster have a very strong squad. From a parochial point of view, Caelan Doris came down to visit me in Arklow a number of weeks ago,
Very good.
and trained the under 14 boys and girls on a Wednesday evening, which was a particular thrill for them all. And I think that's one of Leinster's great strengths is the community that they're building in the clubs in the region, which is going to allow them to dominate for a number of years to come. And yes, I certainly hope that they're going to be in Marseille come May time.
Brilliant stuff. Tony, we're just going to take a couple of questions from the audience. So I have a few coming through here. So first one is, Tony, you mentioned obviously road bridge. The potential fallout, obviously, with the receiver being appointed, how many of the subcontractors impacted will have the ability to trade? I mean, I presume a lot of suppliers probably have had credit insurance, but those that don't, could you give us maybe some insight into that?
Now, we don't have a definitive list of creditors,
Okay.
but our best estimates based on information we would have received previously is that there's probably unsecured creditors of 25 million on the Republic company and probably 20 million sterling on the UK entity, for which Irish companies were also supplying. Other than that, as I say, there's going to be a significant effect. We would think maybe 20% of businesses were credit insured. 20% of the suppliers were credit insured, which is even a significant shortfall across the market. And we would certainly see a number of well-known Irish businesses and Irish suppliers into Robridge will most likely have to go through some sort of an insolvency process themselves.
Okay.
In order to survive. And that insolvency may be a straightforward liquidation, or it may be an examinership. And that will depend on whether they can get external investment to continue to support the business going forward.
Right. Yeah. Tony, I've another question here. I think you kind of touched on it. What do your customers tell you they like about having credit insurance?
I think I have mentioned it. And I think for Atradius customers, I think number one is probably access to underwriters. So you may know your customer, you'll know your industry, but it's always good to get a wider perspective on the business in which you're trading. And if you take some of our underwriters who are industry specialists, they're talking to not only policyholders' competitors, they're talking to their suppliers, they're talking to their customers on a daily basis. We get that. So we get a whole picture of an industry and how they're performing, while a policyholder may only see a slice of that. So I think the access to underwriter knowledge is probably the number one thing that people like.
100%. Another question here, Tony. Sometimes people are skeptical about the level of claims insurers pay out. Some clients think insurers don't pay out claims. Is that true or not true?
If only we didn't pay claims, Arthur, I'm sure my bonus will be a lot larger. But if we didn't pay claims, people wouldn't take out policies.
Correct, yeah.
And we continually pay out claims. Some years are better than others. And because of government supports, the last 2 years have seen a particularly low level of claims because there's been a low level of insolvencies.
Yeah.
But you'll see, for example, in the Irish papers today, PwC came out noting there's likely to be a spike in insolvencies in 2022.
Yeah.
Insolvencies already up 1/5 over where they were last year, albeit last year was a low base. But we would certainly anticipate significant increase in claims and a significant increase in claim payments over this year and 2023. So we have built in a probability of default losses, etc., into our algorithms, and we've increased those twice over the last 6 months.
Okay, that's good to know. Okay, I think that's it, Tony. I'd just like to say thank you again for joining me today for a discussion, and I really appreciate your inputs and knowledge. And thank you again to our audience for taking the time out of your day to catch up on credit insurance. Please look out for future webinars coming from us from Advent. And again, thank you, Tony, and thank you to you, our audience. As I said, this will be recorded and shared on our social media platforms. Thank you, everybody, and have a good day. All the best. Bye-bye.